Hello, dear traders, welcome back. This is going to be a quick forecasting session about the coming week. So, last Friday, we saw the market dropped on this candlestick because the NFP data was released. But as long this high is intact, I'm of the idea that the market will eventually get there and will rare the liquidity, the buy side liquidity resting above the highs. This drop is just making the retail traders to believe that this is a strong resistance point and they must sell at this area. But they place their stop losses, they would place their stop loss above the highs. So not only the retail traders, most of the institutions, the hedge funds or the investors, there is resting the liquidity pool above these highs. And this is not only one high, but these are relatively equal highs, 1, 2, 3. So in my views, I'm of the idea that the market will get there to take the buy side liquidity to clear the pool resting above the highs. And then what? Then here the market has formed relative equal lows. So once the market take the buy side liquidity, then we will see where the market returns and then we can target the relative equal lows. But I don't think it is going to do all these things in 1 week. In the coming week, I'm of the idea that the market will get there above the highs, maybe on Monday, maybe on Tuesday, but it is going to get there. I'm pretty sure. Not only the technical analysis is demonstrating that, but the core data is also saying that most of the institutions, the hedge funds, the investors are sitting in the long positions as compared to the short positions. So what we can do, let's move to the lower time frame. So here also the market has touched the order block, the down close candlestick, red one. So I'm of the idea the market will drop a little on Monday, or it has already dropped 50% wick of the previous down close candlestick is consequently encroached by the market. Now the only thing the market has to do is to go up there and take the liquidity. So if it does not happen on Monday, you wait for the market to give you a setup, a pattern, which gives you a signal that the market is going to rally higher. So now let's do the forecasting on the cable GBPUSD. Last week, the GBPUSD market or GU market was a bit slow because I anticipated the market in my previous session that it will touch this area or it will drop below this low. Let me show it to you on the 4-hour time frame. Why? Because this was an order block and below these lows here is another order block with a fair value gap. So this way the market will not only take the sell side liquidity resting below the lows, it will fill the gap, it will touch the or it will mitigate the order block and then rally higher. Where to this fair value gap I have pointed or which is shaded in the pink. Sorry, this one. Okay, go see it for yourself. It is a fair value gap in the daily time frame and I'm anticipating the market to get there. Why so? Because the GU market is clearly in an uptrend. The liquidity is too much bullish. And now it is the core data for the cable Great British Pound, which is stating that it is actually a factual data released by uh, Chicago Mercantile Exchange. So again, we can see the investors, the hedge funds are sitting in the long positions. The long positions are way more than the short positions. So it is also another sign that the market is going to rally. The only thing we need to do is to wait for the market to get below these relative equal lows to fill the fair value gap. Let me draw the fair value gap, this one, and below the fair value gap there is an order block, the last down close candlestick prior to the up move. So what we will do, we will wait for a setup, a pattern. This is a sign that the market is going to rally, and we will prevent ourselves from taking any short positions in this market in the coming week. Now let's move towards the Euro USD market. The Euro USD market also followed the footsteps of the cable, Great British Pound and United States dollars market. Why? Because the market was also slow in this particular pair. Last week I anticipated the market to fill this fair value gap in the form of BC, buy side imbalance, and sell side inefficiency. The market exactly filled the gap, but it didn't move as I expected it. It's okay, it's all right. The market, there happen such events which slow down the market. So now I'm anticipating the market to break the low, this one, and to mitigate this order block even a bit, if it drops little below this low and touch the order block, that is the point where we buy the market, and we anticipate the market, the Euro USD market, to break these highs, the last high to the upside, because the trend is clearly in an uptrend conditions and the liquidity is too much bullish. We can also see it in the code data. The investor, hedge funds, the institutions are sitting in the long positions. We are having more long positions as compared to the short positions. So it is also a sign that the euro market, the euro USD, is going to rally in the coming week. So it may not rally on Monday, Tuesday, but still we will anticipate the market to rally higher. Why? Because the factual data of the commitment of trader report is stating that we are having more long positions as compared to the short positions. And also the technical analysis we have done in this market is demonstrating that the market is going to rally. So what we do, we will wait for the market to give us a clear setup or signs where we can enter in the market. Okay, so this was a fair value gap in the, sorry, it was a daily order block. Let me remove it. We are having this fair value gap in the 4-hour time frame, which is not filled. This gap is in the form of BC, buy side imbalance, sell side inefficiency. So before rallying higher, the market will drop. Where it will drop to, it will at least drop below this low to fill this fair value gap and then to rally higher. And below the fair value gap, we were also having, this was a daily order block. So it will also mitigate the order block, daily order block. So guys, now let's move toward the AUD USD. You might not know, but there is a positive correlation between the gold and AUDUSD because the Australia is the fifth largest producer of gold. So that's the reason when the gold market drops, this pair follows the gold market. When the gold market rallies, the Australian dollar United States dollar pair followed the gold market. The correlation is up to almost 70 to 75%. So apparently this market is in a state of consolidation. It is ranging between 2 points, but still we will try to do our best analysis on this market for the coming week. Let's start with the core data. So the core data is saying that the long positions we are having in the non-commercial category is 87,000, almost 87,000, and we are having almost 95,000 short positions. But there is also one thing in the change section that 5,663 positions were closed from the short positions, from the short contracts, and they were added into the long. And along with that, 5,632 positions, other positions, were also added into the long section or into the long contracts. But still, if we do our maths or addition subtraction, still the buyers and sellers will be of same numbers. The market will be confused in the coming days or maybe in the few coming weeks because the numbers of buyers and sellers are equal in the market or the contracts, not the buyers and seller members. The contracts, the long contracts and short contracts are almost equal in the market. So what we can anticipate, even with having that idea in mind, we can anticipate the market to drop to this fair value gap, and there is also there is also an order block near to the fair value gap. The market may tap into the fair value gap to and through the fair value gap and tap into the order block and then reverse. So the technical analysis, if we do properly, is saying that the market broke this low, took the sell side liquidity, reversed. Where it reversed to, the market broke this high. So what is this in terms of technical analysis? It is change of character. The market dropped the high. So in technical analysis, we can anticipate the market to rally higher above this high. Why? Because first thing, it is having correlation, positive correlation with the gold market, and we anticipated that the gold is going to rally higher to take the previous highs and create the all-time high. So having that idea in mind, this pair will also follow the gold market, and it is likely to follow the gold market. And with the technical analysis, it will fill the fair value gap, mitigate the order block, and reverse. So what we will do, we will wait for the market to give us lemons, I mean to give us a clear setup to buy the market, and only then we will enter in the market, but not at the area above the gap or above the order block. Neither we will enter below the gap or below the order block. We will wait for the market to approach these both PD areas, and only then we will look for the market. If there appears a pattern, only then we will enter in the market, where we are likely to place our stop losses. So we will place our stop losses below those. So this was all about forecasting the market for the coming week, and I did forecast the gold market, the cable, EURUSD, AUDUSD. So I'm wishing you all a profitable next week. Till talk to you till the next time. See you in another session. Take care.